Kevin Hincks live at the pre-bell playbook with us and the PPI. We have so much to take in here. Some of your thoughts this morning.
Good morning, Nicole. Yeah, a lot going on so far this morning, and it's all across the board. It's data, it's corporate news, it's geopolitics. First, let's get to the economic data, and that is producer price index for the month of January. Now, it's interesting. The headline PPI came out up 0.5. That is higher than expected, but unchanged from last month of up 0.5 year over year. 2.9%. That's a tenth lower than last month, but a tenth higher than the consensus expectations. The core PPI, here's one of the concerning numbers that the markets didn't like. Month over month, up 0.8%. Year over year, 3.6%. The good news is that's a tenth lower than last month. Then ex-food and energy trade services up 0.3. Year over year, ex-food and energy trade services 3.4%. All those numbers slightly higher than the expectations. And let's face it, not exactly coming down. Now, the question is, why is the 10-year yield not moving higher with numbers that appear hotter than expected with inflation? Because in my career, that has spanned quite a long time, there's just never the reaction to PPI that you see from other inflation data. It's a distant fourth in terms of the four looks at overall inflation. So if it starts to show up in the CPI, then the markets would move. But right now, you're looking at a 10-year yield below 4%. You're looking at mortgage rates now below 6%. Nicole, that's eventually going to be good. I don't know if it'll be good today, but that's good news in terms of the 10-year yield. That should help the economy and stocks long term. Not sure if it's going to help today, Nicole.
Look, we think about the other inflation gauges, right? You look at CPI, you look at PCE. Wait, what am I missing? What's the third one?
Wages.
ISF?
Wages in non-farm payroll.
Wages in non-farm payroll. There you go. Let's talk about what's going on with geopolitics. We know that all the ships are lined up and just floating around Iran right now. There's escalation, but we're supposed to talk again next week. It's getting hot, isn't it?
Well, all you have to do is look at crude oil, and it'll tell you that the overall tone between the U.S. and Iran is not getting better. It's not dissipating. You've got crude oil currently, as we sit here, crude oil up 3.7%, trading $67. That in itself is going to show up in inflation data down the road. Also, there's news out this morning. U.S. Ambassador to Israel, Mike Huckabee, told the U.S. Embassy staff who wished to leave to do so today. So that's the New York Times putting that out. So that tells you that tensions are not coming down. So the overall temperature between the U.S. and Iran, higher, not lower this morning. That is showing up in commodities. You see it in crude oil and overall headlines coming out from Israel. So, tensions definitely higher between the U.S. and Israel.
Yeah. Look, I mean, the U.S., Israel, Iran, a lot going on there. And as you said, Mike Huckabee's call, I heard, get out of Jerusalem. If you're worried, do that now. All right. Thank you so much. Quickly, just OpenAI, more news there, more funding, more partnerships.
Headlines this morning, $110 billion in funding, a financing that more than doubles the size of the last raise from a year ago, which was recorded for a private company. Amazon invested $50 billion. Let's see if these names coming out. Amazon, SoftBank invested $30 billion. OpenAI released Friday. The investment boosts OpenAI to a $730 billion pre-money valuation. A big jump there and a bigger than expected contribution from Amazon. Let's see if these stocks react negatively to this CapEx spending. That's what this is. This investment is considered CapEx spending for Amazon. Remember, they were already concerned about the CapEx spending. This one, a bigger number than first thought. So let's watch how this goes up. Good news for OpenAI as they have raised, now a $730 billion valuation, Nicole.
Yeah, multi-year strategy here, strategic move. I will just add one more thing about Anthropic. Did you see that Anthropic told Pete Hegseth and the Department of Defense, no, we're not. And it's amazing because Department of War, right? They said, listen, we have to be able to use your AI to do surveillance on Americans en masse. And there was another part about using weapons without a human. And Anthropic is saying no. I mean, I think that's a really interesting topic. Did you read or hear anything about that?
Of course, and this is a clash between, an AI service that could be used by the Defense Department for surveillance. Now they want to control the level of surveillance, and the U.S., keeping the country safe, says we want to use it however we need to do to keep the country safe. So they want to put limits on what they can do. It's an interesting topic. It's kind of a polarizing thing. If these companies can be used to keep the U.S. safer, how should they be limited? So yeah, it's an interesting, it's an interesting discussion topic with the power of these companies, Nicole.
And may lose the government contract.
Yeah.
If they don't adhere to some of the things that the government wants, even though that Pete Hegseth likes them the best. All right, Kevin Hincks, I know you're there for a market drive. Looks good there. Okay.
Yes.
Enjoy market drive in California.